And we also have the industrial output data, the IIP, for the month of May. Latha, how would these two numbers look? And particularly, if you would just comment on the inflation trajectory, given the fact that tomato prices are, what, 150, 160 rupees a kilo now?
Well, first, the headline poll number itself is going to be 4.6, which is bad when you think that the last number was only 4.25. And inflation has been coming down almost consecutively from the month of Jan. So this is a bit of a bad in that sequence. This was always expected because now the base becomes less bad. 2022, April and May had been terrible because of the Ukraine war. And by June, anyway, the base had receded a bit. So the base also is not helping. And that's one reason why the inflation was expected to be higher. But the bigger reason is really food inflation. Food inflation, again, was working at the lowest from Jan to May. May was the lowest at 2.9%. But now it is expected to come in at 4%. And this is not all base. It's largely because of the tomato inflation, which has spilled over into other vegetables like chili and ginger, and into cereals as well. So economists have all upped their estimates after seeing the food inflation. We have the month-on-month numbers from the Ministry of Consumer Affairs, and that shows that rice and wheat are up 1.3 on the month. Okay, this is not YOY. Pulses are up 6% on the month in June, and tomatoes, of course, 38%. We're still speaking June. July is going to be worse. The other big factor to watch will, of course, be core inflation. Core inflation also has been falling from Jan, and we hit a low of 5.02 in May. But now, again, that's also going to spike, partly because of base, but partly also because some commodities have indeed gone up. So this is not going to be an extremely welcome number. The only welcome part of this whole thing is that it is subservient to the number that will come an hour later from the United States, which will be the US June CPI number, expected to come in at 3.1, which will be 0.3% higher month on month. If it comes that way, the market will take it with both hands. Core inflation, again, expected to be 0.3% higher month on month, but the year on year will be 5%. It's not a good number, but it is far less ugly than what the US has been used to. So in quick succession, two important CPI numbers will decide the fate of what central bankers will do and the yield curve in the coming days. Just a word on the IIP number. That's expected to come in at about 4.6%, 4.87% compared to an IIP of 4.3. But that will be less watched. It's the CPI that will be that will be the most important part for the market.